Hello, everybody. Welcome back to Origin's May community call. My name's Ryan. I'll be leading the call today. I'm going to be joined by Raphael and Peter. We have a lot to get into. We're going to go over everything that happened at Origin Protocol in April. So let me get Raphael and Peter up on stage. Hey, guys. How are you doing?
Jam.
Hey, Peter.
Hey guys, how's it going?
Pretty good. Repping my new black on black Origin cap for the call. I think we may have a few extra, so maybe you can pick one up if you meet Raphael at the next conference he's at. I don't know if anything's on his calendar yet. Do you have anything planned coming up? Any conferences?
Not yet, but maybe soon.
Okay, well, we'll keep you guys posted. I see people are trickling in now, so we'll get started. This is the agenda for today's call. So we're going to go over a few announcements first and then cover some OGN metrics as we always do on our monthly update. And then Peter is going to go into some ecosystem integrations, give some updates on our Morpho markets, as well as some other on-chain integrations. And then we'll talk a bit about product development, give an update on our migration to compounding validators for Origin Ether, talk a little bit about OUSD, and then we have a special guest today, Fusion by IPOR. So Darren from Fusion is going to be joining us. We've been working on some new Origin vaults on Fusion, so some exciting new yield opportunities are coming soon. We'll go over that towards the end of the call, but we'll get started now with announcements. So just a few things to highlight from April. We had really strong yields on the staked ETH ARM vault, also on the ETH ARM vault. So there was some LST volatility in the middle of April with everything that was happening in DeFi. And there was some volatility with staked ETH and ETH. Nothing major. I wouldn't call this a DPEG, but it was around 50 to 60 basis points variation in the staked ETH peg on AMMs. So the staked ETH ARM was able to generate almost 100% APY on April 22nd, and the ETH ARM generated close to 50% APY a couple days earlier. So we had some really strong yield days. If you guys aren't familiar with the ARM, essentially what it does is it captures the spread between LST pricing on secondary markets. So it buys up staked ETH and ETH on DEX aggregators for below peg, and then it redeems it 1-to-1 for ETH through Lido's withdrawal queue or EtherFi's withdrawal queue and captures that spread as yield. So we were able to generate really strong APYs. I think the trailing 30-day average is something like 6% APY right now, so more than twice the yield you would get from liquid staking alone. Pretty low risk product that we've seen some nice adoption on. So really cool to see that the staked ETH ARM vault and ETH ARM vaults are doing really well right now. We're also going to give a more in-depth update on the OETH migration, but it's well underway. Over half of the staked ETH collateral from OETH has now been migrated, and expected completion is going to be at the end of Q2. So we're getting pretty close there. If you guys want to track that in real time, you can go to our analytics page, analytics.originprotocol.com. And in a similar vein, I actually got a refresh in April. So check it out if you haven't seen it recently. But both our DApp and our analytics dashboard have received some pretty major updates. They have a new look and feel. They have some additional data that you guys can view now. Some of that was requested by our community, so we did add that in. I think there's daily APYs and historical data directly on the DApp now, along with some product information. So if you haven't visited the DApp or analytics page in the past few weeks, definitely check it out. There might be some new data there and a new look and feel that you haven't seen yet. And then lastly, our token holder update for April is published. So if you guys want to dive more into details from this call, check it out on our blog, originprotocol.com/blog. We also posted an X article, which covers most of the information. It's not quite as in-depth, but if you want to go over to X, check out our timeline. You'll see that token holder update also written on X. So that's it for announcements. Going over to OGN metrics now. We cover this on every call. But the total buybacks now is over 90 million OGN. So that's the amount that's been bought back from the open market using protocol fees from Origin Protocol. So the fees earned on OETH, OUSD, ARM vaults, all of Origin's products are used to buy back OGN on the open market and then distribute it to ex-OGN stakers. And if you go to originprotocol.com/OGN, you can track these metrics in real time. But if you zoom out to a year ago, we had 10 million OGN bought back, and now a year later, we're at 90 million. So we've 9x that amount over the year, and I think we're on track to buy back around 80 to 90 million OGN this year. So we're slurping up a lot of the supply right now while prices are relatively low. I think 13% or so of the circulating supply has already been bought back, so accumulating at a really nice pace so far. Just in April alone, the protocol bought back 4.8 million OGN, which is being distributed to XOGN stakers. So if you max lock OGN for XOGN, you can earn up to 14.4% APY right now. And again, that's funded entirely by these buybacks. There's no new protocol emissions, so a very sustainable model for staking OGN here. And then the last metric we like to cover is the percentage of supply staked, which is right around 50%. We're at 49 and change right now on the circulating supply locked up as XOGN to earn those rewards. So pretty strong metrics. Like to cover this on every call. There's your update on OGN. I think we're going to dive into ecosystem integrations next with Peter.
Thanks, Ryan. I'm sharing my screen if you want to flip over to that. Thanks. So this is OpenCover, which I may have mentioned previously, but I can get into this again. OpenCover is essentially a crypto insurance company that's been live for a few years now. And what is on my screen right now is the new primitive that they launched recently that they did include the ST-ETH ARM on. I think we're actually the only ETH product that's listed across all the chains even. And it's a very different kind of setup from previous crypto insurances that existed. The biggest difference being with the previous insurances, you essentially had to pre-purchase the insurance and had to set a duration that you wanted the insurance to last for. But this doesn't work that way. How this one works is quite simpler. Essentially, you come to this page already holding some ST-ETH ARM LP token, and then you just one-click deposit, and that basically just gives you the cover. And as long as you want to keep it open, you'll have coverage for the ST-ETH ARM. And then I guess as soon as you're ready to sell the ARM or convert it to another asset, you would come back and click end coverage, and that would be the whole thing. But it's interesting also how you pay for this. They take the cost of the insurance out of the ARM's yield itself. So if you hover over this, you can see that the current ARM yield is 6.34%, and they're taking out their coverage fee of 1.33. Hopefully you guys can see this because it's pretty small on my screen. But then it does the math for you and gives you the remaining amount of the yield, which right now is just over 5% at 5.01. So this is something they just launched in the last few weeks. I think there's been maybe a couple deposits into this coverage vault, but check it out because it's definitely a newer type of opting in for crypto insurance. They have a decent amount of capacity available now. This 1,407 is like right around $3 million, I think, or over $3 million now. But it's pretty quick and easy and painless to opt in for this insurance. So check it out. Easiest way to get to this page would be to go to opencover.com, and I would put in /origin. That will eventually take you to multiple origin coverage pages, but right now I'll just take you to the page you can see on my screen that includes some other coverage options as well. But check it out. Then running through some of the morpho markets, this is the wrapped OUSD stablecoin market where you can lend or wrap and lend Origin's stablecoin and borrow against it. This is the first ever borrow market for OUSD in the life of the protocol, I'm pretty sure. But the yield on OUSD is pretty good right now at over 6%, I believe. So if you're borrowing at the rate that you can see right now on my screen at 4.53, and you were to do that loop a couple times where you take the borrowed USDC and deposit it into OUSD and then wrap it and relend it to the same protocol, if you were to do that loop, I think 5 times, that would get you over 10% APY. If you went with an 80% loan to value ratio, and there's just under $400,000 in borrowable capacity right now, mostly coming from the public allocator. But we're also going to be, we're actually in the process of setting up an IPOR vault utilizing this market that will essentially do those loops for you. So we'll share that market when it's ready to be shared. Right now, it's open to whitelisted addresses only. But that vault will make it really easy to do the loops for you, because you won't need to worry about depositing and borrowing and converting and redepositing. The vault will do all that for you, essentially. And it'll also have the ability to deleverage if the rates move in an unfavorable direction. So stay tuned on that. We're very close to getting that ready for launch.
And Peter, this seems like a fairly passive strategy, at least compared to the staked ETH ARM Morpho market and ETH ARM Morpho market, because over the past few months, OUSD has been yielding over 5% pretty much every day. So as long as this borrow rate stays around 4.5%, you should be profitable for looping. I know OUSD yields have picked up over the past couple weeks. I think the average APY is now in the mid 5% range. But have you noticed if this borrow rate stays pretty consistent around 4.5%? I see the utilization rate here. I assume that's the target utilization is 90%. So you can basically take out up to basically everything in the market minus $40,000 would be 90% right now. And it should stay relatively consistent. I'm looking at that chart right now. Is that 5% or 6% before it spikes? It looks like 5%. So it looks like it should stay under 5% up until the target utilization rate around 90%. But I'm curious, have you been keeping an eye on this market? Have borrow rates been fairly consistent under 5%?
They have been, but mostly because people haven't come in with large borrows as of yet. When that starts to happen, we are going to need some more liquidity. So we're working on onboarding additional curators that will hopefully expose their USDC vaults to this market, so that they can start allocating additional liquidity to this market, which will also help the IPOR vault as well, because that vault will only be able to handle as much liquidity as there is in this market right here on my screen. So we are bound by that at the moment. But hopefully we can get some curators on board soon, so that we don't have to worry about that. So stay tuned as we continue those conversations with a handful of different curators.
Got it. Super cool.
The borrow booster market on mainnet has also had like a fair amount of liquidity lately. The rate did jump up recently, which is why it's pretty high today. But I believe some of the curators are planning on allocating additional liquidity to this market, which should bring that borrow rate down. I think the utilization was just pretty high, which is what caused it to go so high. Yeah, the utilization is up to 95%. So once we can get that down to the kink point at 90, then that should bring the borrow rate back down to where it was previously, which will essentially make this rate negative again, or the net rate negative. It looks like we are still incentivizing a bit on this market with some wrapped USD. But don't worry about this, because this should all come back to more normalized levels relatively soon, as additional curators allocate more liquidity to this market. The base market.
I was going to say, I saw a message from KPK that they're going to be rebalancing and adding liquidity to this market soon. So hopefully this high borrow rate should be short-lived. But I mean, borrow booster is still working as expected, right? The borrow rate before those incentives is like 15%. The issue with this market is we have so much demand because borrow rates are usually super low. And I think borrow rates are increasing across Morpho right now with utilizations. But $8 million has to be our largest Morpho market at this point, and it's been growing really quickly. Really, we're just trying to get as much liquidity as possible in this market, because really we have tons of borrowers and people borrowing 7 figures on this market, because it's one of the most appealing places to lend a ETH liquid staking token to take out USDC loans. So we're really just bottlenecked by liquidity right now, which is something we're actively working on. And I could see this growing to 8 figures of total market size really quickly. I don't know if you can scroll down, Peter, if we can see the historical market size on Morpho. It's this right there. Is it the top chart?
Did I just miss it?
That's total borrow. So I guess
Borrow.
that gives you an idea if there isn't a total market size on the page.
I thought there was, but now I'm not exactly seeing it.
Oh, we can check out the total
Yeah.
borrow just really quickly because that'll give you an idea of how much this Morpho market has actually grown over the past few months. But you can see like back in February, there was maybe less than $2 million borrowed. And now we're up to 7.6 million. So we've grown something like 250% in the past few months. Really strong growth. We're seeing some big players starting to keep an eye on this market, given that it's really unique the way that, and I don't think we explained Borrow Booster on this call. If you guys are familiar with Origin, you're probably also familiar with Borrow Booster. But the way this market works is the incentives from Origin Ether, that staking yield, goes into the borrow rate. So the borrow rate is subsidized by the liquid staking yield. So you post OETH as collateral, and then the yield from that collateral goes to the borrow rate. So if OETH is sending 4% of incentives and the borrow rate's 4%, then essentially you can borrow USDC for free. And through the history of this market, it's actually been negative quite some time. This is pretty much the highest we've seen it. Hopefully it goes down today, but super cool market. We're seeing a lot of growth there. Really exciting to see that we're now above $8 million in total market size and growing.
Definitely. The base Borrow Booster market utilizing Super OETH, it's a lot smaller, but it does have a rate more closer to what we're used to with these Borrow Booster markets, as a negative number, doing essentially the same thing as the mainnet one, where we take the yield and forward it to the borrow side as an incentive to borrow, essentially making it free and in this case a bit profitable to take out loans against the ETH LSTs. This market actually has a different curator that the mainnet one does not have, it looks like. So maybe we can get these guys to join on mainnet as well. We'll see. I'll talk to them.
Yeah, and what's interesting about Borrow Booster too is it's not directly proportional. The yield coming from Super OETH or OETH isn't directly proportional with the incentives on the other side, right? So if you have a 4% APY on Super OETH, for example, the incentives on the borrow rate might be 6%. It depends on how much is being borrowed, because you might have $2 million of OETH generating yield as incentives, but you might only have 1 million borrowed on the market. So if you have half as much funds being borrowed than there is being supplied to the market, it's essentially doubled for you. So you're incentivized on these markets to borrow USDC. So if you're taking out high loan to values, then these Borrow Booster markets are definitely a good play compared to a standard liquid staking market and taking out loans there.
Cool. I did have this tab here too, also on Super OETH. This one utilizing the wrapped version. For this kind of market, you'd probably go with more of a standard leverage loop style strategy. The yield or the rate is actually a bit higher than I'm used to seeing it on this market, at just over 2% at 2.19. The total market size is decent though. This would make it our second largest Morpho market, I believe, for Origin products. MSETH is a derivative of ETH, which was launched by the Metronome protocol, I believe, and it's supposed to maintain a pretty close peg to ETH. I'm not sure if it's 1-to-1, but it's pretty close. We've had this market up for a little while now. It's been a while since we've talked about this one, but the market size is still decent. The other two markets I had here were the ARM markets. They're definitely smaller than some of the Origin markets or other Origin markets. For these, you would utilize the LP token for the STETH ARM and the ETH ARM to borrow against it. Essentially, since you're borrowing ETH, you would use these for a leverage looping strategy. The borrow rate right now is a bit high for both of them, so we kind of are running into a bit of the same problem as some of the other markets, in that we're looking to onboard additional curators to help us allocating more liquidity from their vaults to these markets. But with how great the yield has been the last few weeks on the ARM, you could still run a profitable leverage loop strategy with at least with this Lido one. This ETH one you would probably right about break even, I think, based on what the current yield is. So we're working on bringing more liquidity with these. The last thing I had on here was Euler. Actually, we haven't talked about Euler in a while, but Alpha Growth, which is a curator we've been speaking with for really on and off the last few years. They deployed this market just a few days ago, last week, which I guess you could consider to be a competitive market to the Morpho staked ETH ARM LP token market. This is essentially the same kind of market where you would use the LP token to borrow wrapped ETH, and then you can do whatever you want with that ETH, but most people will probably run a leverage looping strategy. The LTV is a little bit lower on Euler than it is on Morpho, like I'm saying 90% on Euler versus I think it's 91.5. Yeah, so pretty close. This market was just deployed, so there's really no ETH in it yet. Working on getting some supplied so that people can start utilizing this. But right now, I guess you could probably deposit into it if you wanted to, but there wouldn't be anything available to borrow. I think later this year we might have an IPOR market or IPOR vault set up that can lend ETH to both this market and the Morpho market, and then we'll borrow from both of them to do the leverage loop for you essentially, and it will ideally reallocate between the two markets based on whichever one has the better rate for borrowing, and we'll probably have the ability to unwind as well if rates move in a unfavorable direction. But did want to make this market aware since it was just deployed, and because it is now the second place you can borrow against the ARM or the STETH ARM LP token.
And Peter, I alluded to this a few minutes ago, but ARM yields are quite volatile. So for these types of markets, if you're in it over the long term, you probably need to be okay with some unprofitable days. There might be a few days where you're at -2% or -5% on your loop, but then there's going to be days where you're at 100% plus, right? If you were leverage looped in that Morpho market over April, then on the 22nd, when the ARM generated 98% APY, if you're at 3x leverage, you're close to 300%. So all it takes is a couple days where the ARM is able to buy staked ETH or ETH at a decent discount, and then you make back any days that you were negative and then some. So you could approach this as something that you actively manage and you monitor staked ETH and ETH pricing and enter in and out of these markets opportunistically. Or if you're okay taking a loss on some days to try and make it big on other days, then that's certainly how these markets work. It's a bit more volatile than OUST or OETH would be.
Definitely, yeah. If you were to pay attention to ARM markets day to day, it might be a lot to manage with how volatile they are, like you mentioned. But yeah, over time, the ARM markets have done quite well with at least compared to the underlying LSTs themselves, which is kind of funny if you think about it. But this market should be ready to go in like the next few weeks. I want to say by next week, but I think we're waiting for some people to get back from consensus, or some people that would allocate to this market to come back from consensus first. But stay tuned because it should be happening relatively soon.
Okay, I'm hearing from Ziad too. He has that graphic comparing the ARM yields to liquid staking yields over time. So this is a good long-term visual we can play really quickly. But that white line is the staked ETH ARM vault over the past year, and the blue line is the yield you would get from a standard LST. So the standard LST is really consistent, and you can see the staked ETH ARM vault will generate yield. It'll go up really quickly for a couple of weeks or so, and then it might be flat. but over time, it's generated quite a bit more yield than a standard LST. This is over a year. I think if you were to deposit 100 ETH into an LST, you'd earn something like 2.6 ETH. If you deposited 100 ETH to the staked ETH arm, you'd earn over 4 ETH. So it's something like 150% of liquid staking yields on average over the past year. So a nice little graphic there that kind of shows you the yield generated by the staked ETH arm versus liquid staking.
That's a really cool graphic. Is that on the Origin X account somewhere?
It is, yeah. It's on our timeline if you want to check it out later.
Cool. Yeah, that's a fun one. That's pretty much all I had for today, Ryan. We can release my screen and I can hand it back to you unless there's any questions from the audience on any of these things that I just went through.
Okay, I think we're all set. Thank you, Peter. We'll get into some product development. I think we're going to start with OETH and then get into OUSD afterwards. But I'll hand it over to Raphael to talk about some product development.
Hey, thanks. Yes, good to be here, Ryan. Thanks for the intro and Peter for the updates. So let's talk a little. Let's start with OETH, right? Like so, right now OETH is in the middle of a migration to the compounding validators, which is something that's very cool, right? Like so, there is a couple of improvements that we have on that. And I think the first one is with the EIP 4788, which allow anyone to verify the balancers and the validator state on chain using cryptographic proofs. So this reduces the reliance on third-party oracles and assumptions. So this is very cool for, I think, for the industry standard and adopting the new technologies that Ethereum has provided as well. And the second piece that is very cool of this migration is the EIP 7251, which is instead of relying on the rewards being swept out and redeployed, the rewards stay inside the validator and keeps auto compounding for that. So it's pretty cool because it also allows us to do partial withdrawals in a more flexible way, so we don't need to wait to actually have 32 ETHs to withdraw the whole thing of the validator. And yeah, right now we have been facing a little bit of a complication, just like everyone else on the LST market or whoever wants to stake and unstake, because the queues has been like completely insane. So for those who don't know, like if you want to stake any ETH right now, you will, once you do it, you stay 62 days without earning any yield, and then only after that you're going to start earning yield. So this is a pretty complicated state right now to be in for all the LSTs that are facing like growth and things like that. Yeah, I think this is it for OETH, so we're expecting like to be completed soon. But let's talk about OUSD. OUSD right now begin allocating into markets on Hyperliquid, which is really cool. So we have on W Hype and K Hype. So the USDC that we have now on OUSD can now allocate into Ethereum, Base, and Hyperliquid. And this is really cool because the yield has been great. To be honest, like right now, the 30 days trading average is 5.4, but the yield is actually around 6%. And the coolest part, like, well, the coolest and also complicated part is it's how yield gets distributed with our tokens, which is like the dripper. So what it happens is that for the yield to go up, the dripper needs to get full, and then it keeps going to different levels. So if nothing changes and we don't get any yield anymore on OUSD, we'll be giving 6 0.1% yield on the next 3.6 days. So that's like a very cool number. So, but as we are located to the morpho markets, the yield keeps going up and up. So that's why it has been growing on this stage. And the other part is that we have been looking a little bit more on the expansion of OUSD and how we can go into other chains. So we're still trying to figure it out what's the best way there and what's the best approach. But this is one of the parts that we are investigating. And something that is not here on these slides before we go to the guest speaker is that there has been a lot of discussions about ARM and how ARM could be used in other places. Right now we only have for LSTs, and we're going to start auditing an ARM for ETH to arbitrage SUSDE with USDE. This is one's going to be very interesting. We have been running this internally with our own capital and has been very good. So we're working to audit and make this available for everyone else. Hopefully in the next community call, we don't talk about it. We just show in the UI.
That would be cool. Yeah, the SUSD ARM is pretty exciting. I know right when we launched, it wasn't generating that strong of APYs, but then Athena updated their withdrawal queues so you can recycle liquidity a lot quicker now. And ever since that happened, that ARM has been generating really strong APYs on stable coins. So yeah, really exciting to branch out and have an ARM for something outside of liquid staking. Seems like it will be a good point too, as you start talking to institutions focused on real world assets and other types of assets that ARM could potentially have a use case for.
Exactly. And I think I don't know exactly the numbers, but I think it was generating maybe 6% on Athena, which was pretty cool.
Definitely.
But yeah. Cool. That's it for me. Thanks, Ryan.
Thank you, Rafael. Time to get over to our special guest, Fusion by IPOR. We're going to have Darren joining us to talk a bit about their vaults. Hey, Darren, how are you? Good to see you.
Hey, guys. Thanks for having me.
Yeah, of course. Let's dive right into it. We have Darren with us now. We've been working with Fusion by IPOR now for a couple months, and we're getting close to launching a few Origin vaults on the platform. So I'll let him take the stage now, talk a little bit about what Fusion is and how we're working together.
Yeah, so Fusion is institutional vault infrastructure. People are using it for different things, anywhere from lending optimization to leverage looping across one or multiple markets, or even carry trades. And you can think of it kind of like a hedge fund in your pocket, except Fusion vaults are fully non-custodial, transparent, and automated. And actually, I really like hearing you guys talk because this is I never attended a call before, but you guys have some really cool products. I really love the ARM product, right? It's it's taking advantage of DPEGs, and it's also it's taking advantage of actually a market dynamic that's actually caused by looping vaults, which is the DPEG, or the premium of STETH or of Athena. And it's a super cool product. I was talking with the Yo team, which I believe that their Yo products also allocate to I think at least the ETH ARM product. And no, it's really cool. So I think that Fusion goes along quite well with this because that's an automated market arbitrage opportunity. And then you guys talked a lot about leverage looping it, and automation in on-chain strategies is exactly what Fusion is really made for. So we know that with the issues around the RSETH spill over to the Aave events, something like this, it puts a lot of pressure on leverage loops in general. But Fusion is an infrastructure that's really kind of optimized for this. So if you're looping some of the Origin products, you want Fusion as an infrastructure and an automation engine so that it can both arbitrage and take advantage of these opportunities and also escape from them. So, I think Peter mentioned that vaults a vault's automation algorithm can actually also take into account when to wind down or when to exit a market. For example, we had an ETH vault that was among one of the first to actually migrate out of Aave's V3 core on an ETH looping strategy. And this is kind of what our infrastructure is optimized for. I don't know if you have any questions about that.
No, that's all pretty clear. I'm curious what some of the features are of Fusion to do leverage loops, and why users choose Fusion instead of going directly on one specific money market, for example.
Yeah, for example, I mean, we know, I'm guessing we're quite familiar with the idea of vaults, but if you're not, vault is, it does something like it aggregates deposits, it connects with markets, it standardizes operations. But vaults are not all built the same. And I think that actually we met with the Origin team a couple of years ago. We started talking then and retouched base just this year, and probably around the the different leverage looping strategies. So very similar to kind of your guys' products where you're offering a lot of user transparency. Vaults can be as transparent or as non-transparent as can be. So for example, there's a lot of leverage looping vaults that are doing highly levered Athena trades or highly levered STETH trades that have obviously been printing negative yield with, if they're heavily leveraged on Aave right now. But the vault infrastructure doesn't necessarily track the position. It doesn't update the showing the negative yield. And you also are trusting potentially a centralized operator who is updating the share price. Fusion, we built the stack to really optimize about everything that can be done on chain should be on chain. We wanted a vault stack that's modular, composable, that can actually be changed over time and has this flexibility to operate within bounds. For example, using a flash loan to migrate between venues. So I think Peter was mentioning that you'll have some of these, OETH, OUSD strategies across multiple markets like Morpho and Euler. So you can use a flash loan to migrate between venues, as long as you have the same leverage to optimize. And this is extremely important for kind of yield optimization, where you can actually move between one market or another to optimize your yield. But you can also use that same mechanic to escape a market in case of a situation exactly like we've had for kind of the last month in DeFi. So Fusion's construction, everything is visible. We call them fuses. So for example, let's take a looping vault for OUSD. Let's imagine that you have these fuses. If you wanted to do a lending optimizer, let's just say I'm comfortable lending USDC across all of the Origin USD products, I could choose those down to the market and the respective collateral across Morpho, across Euler. I could set up my own automation using a Python SDK, or I could put it into one of like the Origin ecosystem vaults or one of the curated vaults around the Origin ecosystem, and that's actually going to go cross market. That might be lending across multiple opportunities, and you can think of that as the supply side of the looping, and then the looping vaults are sitting on the demand side, where you're going to take a leverage position, farming the levered basis between the cost of borrow and the rate of return. And the whole idea is that all of these processes can be transparent, they can be fully automated, they can be optimized. You never have to guess where your money is. And then the vault, you can verify this at the vault smart contract by the connected fuses, by the assets that are listed in the substrate. So you think of it like a blank engine, and you can literally see what actions, what assets, and what markets the vault is connected to at all times. And then that automation can only happen within those bounds. So again, transparency, modularity, on-chain security, and kind of real-time trustless accounting.
Awesome. I see this note here on 15 plus ecosystem operators with some big names: Llama Risk, Tesseract, ClearStar, etc. What's the role of these ecosystem operators in Fusion?
Yeah, so ecosystem operators, you can think of them like the curator economy, or what we call inside the Fusion stack an atomist, or traditional finance, the asset managers. So these guys are really setting the strategy on the smart contract level and also the automation. So, for example, you might choose, like, I guess in the Origin protocol scenario, where you trust the Origin team and execution on the ARM strategy, you would be trusting the ecosystem operators for the strategy that's running on chain.
Awesome. Well, that's a great intro into Fusion. Maybe we can go to the next slide and talk a bit about our work together over the past month or so.
Yeah, so I believe that there are two strategies in the pipeline, WOUSD leverage looping, and I believe WO ETH leverage looping. And so I believe that's going to start across the Morpho markets. But as you guys mentioned on the call, with the extension to Euler, again, this is where Fusion shines as a cross-market leverage looping mechanism. So I imagine that the strategy might expand to these different markets, where you can get the levered basis between the cost of borrowing USDC and the rate of return, and then cross-market. And I believe that there are a couple of other strategies that will be expanded on in the future. And I believe it's probably leverage looping, and then that strategy, the lending optimizer against Origin assets. And so all of these could be vaults in the near future. I think we've done some internal testing, and I believe still looking for a curator, but as you can see, the vault is wired up. It is allocating in test and whitelist mode. And I think that we might see it soon in the wild.
Yeah, I think we'll be locking down an ecosystem operator here pretty soon. So once we do that, we'll make an announcement, especially once this is live for users to tap into. Quick newbie question here. Do the ecosystem operators choose the leverage loop position, or does the user get to choose that on their end?
It is global, and it's done by the ecosystem operator, the curator, the atomist. And this is exactly like you are trying to find what's the best risk reward that you're looking for. So maybe there are multiple curators that are doing Origin strategies. You might be to choose between them. It's probably too small on the screen, but on the Fusion web app is really, we focused a lot on transparency. So if you click down into the vault details, you can see the plain text description where you might see the leverage. But on this screen cap here, if you were to scroll down on the Fusion app, you would also see the entire positions overview. So below the allocation screen, you get basically a balance sheet overview of the vault's assets. So that's like an asset and liability breakdown. It has a consolidated leverage overview. So you always know what's the full leverage of the vault, where the assets are, where it's yielding. You also get a view in case it's negative yield. And, as you guys mentioned, leverage looping tends to go negative from time to time. So we never hide that. You always know exactly what's happening with your asset, unlike maybe some other vault stacks. You can see it on the performance chart. You can see it on the share price. So we pride ourselves in building a transparent stack so that you never have to really guess. You can always do your own research by just looking at the vault screen.
Very interesting. So is the leverage loop positions a parameter that ecosystem operators manage? Like maybe it's as low as 2% or 2x and as high as 5x. And then depending on how good the opportunity is, maybe they leverage more, or is it more of a static target where you deposit into the vault and they target a 4x loop on the position?
It really depends. It changes from curator to curator. So there's two really primary roles inside of Fusion. One's called the atomist, which is like the curator, and the other role is called the alpha. You can think of your alpha as your execution engine. And so, for example, within, let's say you're running a fund, you can actually split strategy and execution. So it really depends on, how the strategy is described and then what the execution really does. Remember, depending on what the asset is, levering up and levering down usually has a cost. And that cost is something that you guys are actually actively arbitraging with these ARM vaults. So a lot of times it makes sense to feel the pain of a negative carry for some time. It outweighs the damage of actually unwinding a position. But of course, in kind of black swan scenarios, this is where you want to pull the exit all markets. And again, that's where kind of fusion shines. But you typically think that there might be bands. Let's say if you're running a carry trade, let's say if you want to do this wrapped OUSD leverage looping, but you're borrowing against Bitcoin. This is an example of a carry trade. So you might have like wrap Bitcoin at Aave, borrow USDC, and leverage loop it for WOUSD. This is where you would actually want to have a lot of automation between, maintaining that LTV between the base asset and the borrowed asset, and then on the leverage loop. So, this is exactly why you'd use a vault, an automated strategy. So it really depends place to place, and I would suggest that you read the vault description. Also look at the balance sheet overview.
Awesome. And I was just checking out the app as well, going through some of the live vaults right now, and it looks like there are yields up to over 20% APY. A lot of them fall in that high single digit range. But I want to give you the opportunity, Darren, to shout out any vaults that maybe have seen some high growth or that you feel are good opportunities to check out. And maybe some of the Origin community will want to get familiar with Fusion by IPOR before we actually launch the Origin vaults and just try it out for themselves.
Yeah, sure. I mean, in general, I would say that a lot of people, when they come, they want to get into the leverage looping vaults. Always, the leverage looping vaults carry some risk. I mean, every strategy carries risk, but leverage carries risk, which you can see in kind of the spillover from the Kelp and Aave. Always, the lowest risk is lending optimization, but we know that DeFi people don't like to come to the screen and see lowest yield and click here. But maybe it's good to have a kind of a risk-adjusted portfolio where you take a little bit of each. The reservoir strategies were some of the first to bounce back in leverage looping, partially because they have a dedicated capital pool. So, for example, if Origin assets actually have this dedicated lending optimizer, rather than solely relying on the curators on Morpho or on Euler to kind of split their assets, if there's this kind of captive pool that's interested in lending to Origin-only assets, this is one way that the spillover, in other markets is somewhat isolated, because you can always have kind of this captive liquidity inside of the ecosystem. So I imagine that we're going to see a lot more of these types of strategies. And yeah, I'm quite excited to see the strat come on online, and see the other ones. Hearing you guys talk, I already did some research about the ARM strats, and then hearing you guys talk is quite cool. It's quite nice to hear from very good operators on chain.
We appreciate that. Yeah, we're very excited for the ARM. Definitely putting some resources behind it right now, trying to expand to new vaults and optimize the vaults we have. So hopefully we can get an integration there with the ARM, maybe once we get these live. Peter, maybe you can give just a really quick update on where we're at with this integration, maybe a estimated timeline. I know we don't have a firm launch date yet, but just so users can expect when this will go live, or at least an estimate, and where we're at with the integration.
Pretty far along. We're just confirming if a fund is going to be a curator for this particular vault. We spoke to them last week. They were supposed to get back to us by the end of last week, and we never heard from them. So I guess I can follow up with them today to try and get more of a firm answer. But it's very close. I mean, if they say yes, then I think essentially we put one of their addresses or set one of their addresses to be like the curator address, and then I think that's about it, other than allocating a little bit more liquidity to the Morpho market and to the vault itself, some of which will come from the fund, I believe. But I think that's about it, other than getting it ready to launch. That's practically there.
So it sounds like it could be live by the end of the week. Don't hold me to it, but it sounds like it could be pretty soon here. So once it is live, I will share announcements on Discord and X. So stay tuned to our social profiles. If you're in our Discord community, you'll hear about it first, but really interesting opportunity. Darren, I'm not sure if there's anything else you want to share, if you want to do a quick plug here before we wrap up, but I thought this was a really good overview of Fusion. I definitely learned something.
I think that's it. Looking forward to rolling out all these integrations.
Absolutely.
Thank you so much for joining us.
Thank you, Darren. It was I also just wanted to say some stuff. Like I met actually Darren like 4 years ago, like randomly, and I'm very happy to see him again here. And I don't know, Darren has been building in DeFi for so long, so it's such a pleasure to have him in our community call. Real OG there. So thanks, Darren, for coming.
Thanks.
Love it. All right, guys. Thank you so much for joining us. We'll see you next month. Again, if you want more detailed updates that we covered in April, go over to our blog, originprotocol.com/blog. You can read our token holder update that goes more in depth on some of the things we covered today. And then stay tuned for that announcement on the Origin vaults on Fusion. Should be coming out soon. Until next time, guys. Thank you.